Hi everyone, hope you're all doing well, and today I'm going to talk about the free stocks to buy March 2021 edition. Now today what I'm going to do is the first stocks are the two stocks that I'm looking to buy, and the third stock's going to be split up between a few stocks that are very close to be buying and that are definitely really interesting to me. So probably not as much conviction right now as the first two, but I all the stocks on here that I do really like and I could buy at some point, but the first two are more definite buys. Obviously that's why the title is free stocks to buy and not two stocks to buy in, three that I'm considering. It just doesn't make sense really. So yeah, we're keeping in with the theme of free stocks to buy. So this is the US stocks I'm looking to buy. I will do a UK version in maybe a few days time. But yeah, there's definitely some interesting ones right now. I'll try spend maybe about 5 minutes talking through these companies and why I really like them and kind of give my bull thesis why I think they'll go up. And also all of the investments that I do say are stocks I'm looking to hold for 2 to 5 years, and if I'm buying these stocks, I expect at least to get 100% return from them. And yeah, that's normally what it's a long-term investing channel here, and that's what I plan to do. So yeah, we'll get started on these free stocks to buy. If you do want to know when I am buying stocks and selling stocks, make sure I join the Patreon. Link is in the description. And also, if you do want to start buying some shares, there's a link to a free trade account. But number one is Tattooed Chef. So Tattooed Chef is a stock that I started buying somewhere around the $17 range, while it was still a SPAC stock. I really like this company. I don't normally buy SPAC stocks, but sometimes if I see a company that I'm like, okay, I really like this one in the long term, they've got a proven business model. That's what I don't like about SPAC stocks. I don't like buying SPAC stocks where they're like, oh, it's like story time, like, oh, we've done nothing previously for like the last 10 years, but you know, in 2 years' time, yeah, we might do $1 billion revenue because we've got this product coming up. And those are the SPAC stocks I don't normally touch. I normally like SPAC stocks where they're like, okay, this is what we've done previously coming onto the stock market, and this is what we're going to do when we get the injection of cash. And those are the ones that I'm like, okay, I like where they've come from and I like where they're going, and those are the ones that I like to pick up. So there's not normally too many SPACs that I do like to pick up. Tattoo Chef was definitely one. I think the other one that I own is Skills. I think those were the only two that I own that was previously a SPAC stock before the actual merger was happening. I bought some after the SPACs, but yeah, those are the only two I believe that I've got in the portfolio that I own pre-merger. And yeah, Tattoo Chef was one that really stood out to me, and I was like, okay, these guys have done amazing previously, and I think this cash injection will help them. And Tattoo Chef involved in plant-based products and mostly like frozen meals, ready meals, and yeah, I think the management team here are solid. I think Sam Galetta here has been in the industry for something like 35 years, and he's taken the company forward massive amounts. I think his daughter, Sarah Galetta, as well, I think she does very good on the development side of it. She's pretty much developed all the products from where they are right now herself, and yeah, I think the management team are fantastic. I really like the management team in here. The other thing that I like is the SKUs. So at the moment they have a decent amount of SKUs, which is basically products that they have. And these SKUs are going to increase a lot over this year, which is great. So they're going to have more and more products. At the moment, they're involved in a few stores. They've been mostly in like Sam's Club. Walmart was kind of a newish deal where it's kind of ramping up a lot more now. It's kind of getting out there into the max amount of Walmarts. But the Walmart deal proves that this product, Tattoo Chef, is a successful company, because what we've seen with Walmart is they've kind of taken on Tattoo Chef. They've put more and more in the product into more and more stores. And as well as that, they've had more of the products. So if you think about Walmart, you know, are Walmart going to give more shelf space to a product that is performing poorly, or they're going to give more shelf space to the better products? And this must be a better product because they just keep giving them more shelf space. So I think when we look at the Walmart deal, I think this is a great blueprint of how successful the company is on the sales front, and also that it has repeat customers as well. So I think the Walmart proves that this can be a successful business model. I think when we look at what else they have, they've got Costco, which they're now expanding internationally. And when we look at Tattoo Chef, previously Tattoo Chef has just been more US based. So you still think they've got the massive expansion plan worldwide to still come ahead, which is great. You look at Target. Target only had, I think it was 2 SKUs or 3 SKUs. And that's not a lot really, especially when you compare it to something like a Walmart. But what has been interesting is Target seemed to be ramping up the partnership with Tattoo Chef a little bit more, which we kind of see previously has been successful in Walmart. So if Target then put their Tattoo Chef brands in a few more of their stores. That's going to help sales. And then let's not forget, they only have 2 or 3 SKUs, I think it is. And from what we've heard, these products have been selling really well in Target. So it makes sense for Target to then put them in more stores, and instead of only having 1 or 2 products, in the stores, can we go to 4 products, 8 products, 12 products, and get a bit more to the Walmart side of it. So I think every evidence that we've seen from Walmart, all the evidence that we've seen from Target is that these 2 stores really do like the brand and keep ramping it up. So we've got a lot of progress there. And also when we take Costco as well, can Costco go more worldwide with it? That could be something amazing. Another thing as well is that we kind of got early earnings or preliminary earnings from Tattoo Chef, and those earnings were pretty good. They were what we expected. The revenue was a huge amount of growth, which is really good. Going forward, the company is still going to grow at a really good rate, and it is very much profitable at the moment. Very good balance sheet on it, very cash heavy, which is great. And I think that these guys, Tattoo Chef, are introducing their product to some more stores at the moment. So hopefully, maybe in the earnings call, we'll get some information about maybe a new store taking them on. You look at the potential there, and Kroger, if Kroger was to take Tattoo Chef on, that's another something like 18,000 stores, maybe Safeway or something like 7-Eleven. There's loads of stores that they could go into, and then that would also help sales if they get a new partnership. I would like them to at least land at least 1 big one this year, for sure. Maybe even 2 or 3 would be really good. So that's something where the growth could be. And then we're not even, touching the international side there. And previously as well, Tattoo Chef, 0 marketing really. And now they've got a good cash pile. What they can do is actually use their marketing budget to try and get their brand out in different places. So you look at what they've achieved with previous growth and now add an actual marketing budget to it. Looks really good. So I think Tattoo Chef, somewhere, I think it's around the $20, $21 range right now as recording this video. I think at 21, it's not too bad. I think if you can get it 20, that's good. And if it goes under 20, it's load the boat. And it's been stuck in a little bit of a rut. It had a very good run, but now it's pulled back slightly. It's been stuck between a 1 billion, 1.5 billion company. But yeah, I think down the line, you'll be talking Tattoo Chef. For me, I would expect at least a 3x return from this company. Probably even more than that, to be honest with you, but that's where the minimum I see this one going. So I'm a big fan of this one. So number 1 is Tattoo Chef. Number 2 is a company that I covered a few days ago because they brought earnings out, which I thought was very good on the partnership front, which is Beyond Meats. Now, Beyond Meats is in a bit of a tricky situation because it's once again a plant-based alternative to meat, but the difference between Tattoo Chef and Beyond Meats is that this is more ready meals, retail, frozen food, whereas Beyond Meats has that part of its company, which is half of it. The other half is actual food services. So let's take, for example, that if you were to go into a Taco Bell, Beyond Meats would have one of their products in Taco Bell, and you might order a Beyond Meat product from Taco Bell as for whatever you wanted to eat. And they have this with other partnerships like KFC, like Pizza Hut. So half of its money comes from the retail, half of it comes from the food services. Now the problem with the food services at the moment, it's totally being wiped out. Restaurants are shut. With restaurants being shut, people aren't going in to eat, or if they are open, they're doing limited orders where maybe it's only collection or delivery. So that part of the business has been absolutely slaughtered in the last kind of 6 to 9 months. But going forward, the next maybe Q3, Q4, what we'll see is the food services part of the company start recovering. And the thing is that Beyond Meats have signed loads more new deals in the food service business. So even though the retail's performing very well, I think the US growth was like 70%. I think the retail internationally, which it hasn't really been in that much, like China could be a massive growth platform, even Europe. I think the retail growth on the US was 70% and the international growth was like 130%. Food services declined, but the thing is that they will recover in this year. And as well as recovering, I think with some of the partnerships that Beyond Meat has signed will be incredible. And I think the food services will not only recover, I think it will surpass it by quite a bit. And these partnerships are someone like Starbucks. So they have a deal with Starbucks, like Taco Bell, Pizza Hut, KFC, And I think the biggest one of all that's just got announced recently was the McDonald's partnership. So Beyond Meats have signed a partnership with McDonald's, and they're going to basically help them with the McPlant burger. We don't have too many deals with, too much information on this deal, but I think that is by far the biggest deal that Beyond Meats will ever sign in their life as a business. To be supplying the plant-based alternative burger at McDonald's is fantastic for branding. You know, having your brand in, I think it's 40,000 McDonald's stores is only going to help your marketing side of it, which will be free. And as well as the marketing side of it, you've also got the point of the sales. You know, how many people going to buy McDonald's every day in them 40,000 stores? This is only going to help the sales go up huge in the next few years as well. So that's going to be great on the sales point of view. You know, I keep saying a lot about the marketing side of it, of having these partnerships, but the sales, you know, I think there's like 30,000 Pizza Huts, and that's only going to help sales. So yeah, very good from that point of view. And also another deal with Pepsi. So that's another deal that's going to help sales. So all these deals that they've announced in the last 12 months are really going to start taking effect in the coming quarters. And I think the food services is going to be really good for Beyond Meats going forward. So yeah, I think that's really good. I think at the moment they're ramping up production to be able to supply all these partnerships, and all the growth they're going to have in Europe, all the growth they're going to have in China as well, especially because the amount of Starbucks they have in China, I don't think many people realise it's going to be huge on that point of view as well. So yeah, very good on Beyond Meat's point of view. Like, it's a company that I still think is going to have a very horrible Q1. I think Beyond Meats will probably still have they might have an average Q2, but I think when we get around to Q3, Q4, they should see some signs of recovery and should be pretty good. So number 2 was Beyond Meats. So we'll get on to number 3, which is split between a few stocks. So I'll kind of only spend a small amount of time on these guys. But start off with number 3. The first one was going to be Amazon. So these guys have kind of flatlined at the moment. And I think people kind of realise that Amazon, the day of Amazon going up 100% every year, have gone. You know, it's kind of getting a bit more into its mature part of a company now, and a bit more of a mature stock where it can't go up that much. But I still think people are missing the trick here with this one. I think Amazon is still going to put in decent yearly stock price gains, as well as the growth of the company. Still on the revenue front is still going to grow at a decent rate, but as well as the revenue still growing at a decent rate, the profit on it, like the profit on Amazon, is always beating expectations now, and they're really bringing in the rewards. And what people don't realise is that I think Amazon's at like a forward P of 60. At the moment, with the way that Amazon beats profit, that forward P of 60 is actually probably going to be even lower. And then you're thinking, okay, I'm getting a really good company here at probably an even cheaper valuation than what everyone else is realising, and it's going to put in amazing growth. No one's going to touch Amazon in the next few years on the retail point of view. It's still going to be dominant. Amazon Web Services, Amazon Prime that they have, all the other things that they work on in the company, I think it's going to be really good for Amazon. And you can't tell me that if Amazon carries on doing the profit and the revenue that they're doing right now, the share price isn't going to stay where it is. The share price isn't going to go down. You can't tell me that. You know, in 5 years, Amazon is going to be higher than where it is right now, 100%. And I think people are missing that. And I think when Amazon's down here, and I think maybe the CEO changes maybe making people a little bit nervous, but I mean, generally, who would have been a better choice than Andy Jassy? Like, he's been there for, I don't even know now, like over 20 years. He's the leader of the web services, which is a massive profit beast for Amazon, a really good revenue beast. And yeah, I think that it's probably the best replacement that we could have had, really. So I think everything from that point of view is good. And also this isn't something that I'd put in a bull case for the company, but what I'd say is that realistically, if this company was to announce a stock split, I think this would be a bit of a game changer for this company. If you judge what happened to Apple and Tesla, but that's not a fact. You know, that's just that's a bit of a. I'm just kind of saying that out there. I don't think it will happen, but just saying that could be something that does kind of move the stock going forward. But overall, like, just as a company point of view, I think Amazon right now, while it's kind of just flatlining, is a lovely blue chip to start picking up. So yeah, Amazon is one of the stocks. The second stock is DraftKings. So DraftKings is a company that I just covered a few days ago. Really good Q4. I really wanted to start picking this stock up quite heavy, but at the moment it has been on a good run, which means that I might hold off buying. these guys are really going to benefit over the next few months as online gambling is allowed in more and more states. And yeah, I think DraftKings is one of my hot stocks that I really do want to start picking up. But it was supposed to be on this list, but the problem is because of the jump that it's had because of earnings and everything else. Like I think people then the next day when it was open, which I think was Monday, kind of realised, oh, those earnings were fantastic, and then even more people came in. And yeah, it's just gone up a little bit too much where I want to buy at the moment. But if this can have a dip below 60 again, would love to start picking some more DraftKings up. And the last stock on this list is Shopify. So Shopify was a stock that I think was on the last free stocks to buy. The stock's gone up quite a bit since then, so that's the only reason why it's not on this list again. But if Shopify was to be able to have a little bit of a dip, I bought when we had a little bit of a slowdown in the market last week. It was a stock that I prioritised to pick up, but it has recovered a little bit. And if Shopify was to have another dip again, somewhere around the 1,100 range, particularly, that would be somewhere that I'm really interested in picking this company up. But like I say, those are kind of Amazon's a little bit more where I'd like to buy. The other two need to come down a little bit for me to buy, but they are stocks that I check in pretty much every day to see if they're having a dip. So those are kind of the other three that are interesting. I'd say Amazon's definitely the one that the better prices out of them three, but I would say the Tattoo Chef and Beyond Meats are definitely prices where I'd like to buy right now anyway. So hope you enjoyed it. Those are the 3 stocks to buy in March 2021 edition. If you could smash the like button, always helps the video out. If you are new, subscribe as well, that'd be absolutely amazing. And I'll see you in the next video.